All right, let me just drop this in the other chat as well. All right. So the people who are on here, do you guys have any questions because of what we've seen so far, right? Why we have a bias and why we were looking for calls after last Friday? Because like I said, liquidity was swept right here. We look for a reason for price to change direction. There's three reasons here. Price came right back, retraced to equilibrium, to discount, it rejected fair value gap, and it swept liquidity. So that's three reasons to go long. And as you can see, this whole week on my channel, I said that we are going long. We're looking to continue up. I said that on my channel. Why? Because we hit support, we sweep, and internally, we're looking for sweeps as well. Internal sweep. So this is this is technically just the soup because it's a sweep inside a fair value gap. But internally, we're looking for sweeps to continue us up. So we create liquidity here, we retrace, and the same stuff happens, right? Where we come up, we retrace to 50%, and we sweep liquidity in order to continue the trend. We need sweeps in order to change directions for us. And we had it right here. Sound repetitive. We continue up. And as we are creating new highs, because we had a high right here, we broke structure. Then we create a fair value gap, and price sweeps liquidity inside fair value gap. Right here, sweeps liquidity inside fair value gap. So this whole time, we were just looking for an excuse for price to go up. And as I was explaining to the group earlier, just before more people came in, is that this is the 4-hour time frame of QQQ. We came down and entered like this. And this is the 1-minute time frame on SLXL. And this is what I swung and entering the same exact strategy, but on a different time frame. This 4-hour. I know that 4-hour we're bullish. And so I look at how can I get into longs when price is dumping? And price dumps to fair value gap. I think this was was it a 5-minute fair value gap? We had a 5-minute fair value gap right here. All right, the gap in between, it's a 3-candle structure. So we have candle, there's a gap because there's a big candle and a little candle right here. So there's a separation, and that is the fair value gap. This is a fair value gap, okay? And so when price comes down, it usually reacts at fair value gaps. So if we look for 618, if anything's below 0.5, we're getting it at a cheaper price, and that is where we look for our entries to go long. 618, fair value gap, bounce, go long. 618, fair value gap, go long. And currently, it hit my target actually, but I'm still holding it. We'll see, because I like that QQQ is going up, or NQ is going up. So that means that the overall market is going up. So if I have something that is inside QQQ, which is the semiconductor, this is the ETF, but essentially it is TSM, NVIDIA, AMD. If you don't like trading them as options because they're so expensive, look for the ETFs, right? Just like Tesla is inside of QQQ. But if you want to trade Tesla options, it's expensive, so you trade QQQ. Same thing. This is the ETF of semiconductors. This is SLXL triple leverage. There's also other ones as well you could look for, or you could trade like TSM or AMD as well. They are also affordable. But that's why you want to go with the trend. And the going with the trend isn't just this. This is not a trend right here, right? But why am I still holding longs? It's because the trend of QQQ or NQ is still bullish. So I'm looking for reasons for every time it dips for price to change and come back up. Does that make sense? Anybody want to put something in the chat if it makes sense, or if I'm just talking to myself, or am I going too fast? Feel free to unmute yourselves as well, but look at the 4-hour, right? Look at the 4-hour. It looks clear on the 4 hours. That's why a lot of times people say, when in doubt, zoom out, okay? Because when in doubt, zoom out. Let me go to the 2 minutes, for example, right? What does this look like to you? Looks like chop. But why am I still bullish? Because the 4 hours tells me I'm bullish. All right, we're sweeping liquidity here now, so just be mindful. Internal sweeps cause price direction change, or displacement continues price up. Okay, but look at the same thing right here, right? This is the 2 minutes. As we saw earlier in the 4 hour, we had what? We had a price breaking out new highs. We broke this high right here. We came up to here. And look what happens. We came back into discount 0.5. And since I said we're looking for longs, we look for fair value gaps inside discounts. And this is where you would go long. And do we also have a sweep right here? Internal sweeps. So this exact same thing has been happening over and over and over again. And I want you guys to be clear on what to look for, right? You want to look for a trend. Look at this, it's breaking out. It's beautiful. You want to look for the trend. The trend is up. So when the trend is up, you look for one price to dip to get in. People always say, oh, buy the dip, buy the dip. This is buying the dip. But there's context to it. When you buy the dip, you need price to come down to discount. And it needs to give you a reason. Whether you trade supply demand, whether you trade indicators or whatever, it needs to reverse, pull back, correct in order for you to get in an optimal trade entry, right? OTE, you hear OTEs in the trading space, that is optimal trading entry, and that is discount right here. So just like we saw in the 4 hour, it happened again on the 2 minutes. And look at prices displacing up. So where does price look like it want to go, right? We had that break of structure that I mentioned in August, right? Or no, yeah, August 15th. That was like a month ago. I said we broke structure. So when we dip, we're waiting for price to come down here so you can get into longs. That's why sometimes when people are saying, oh, I'm a swing trader, I'm a day trader. Well, this is an opportunity down here to swing because this happened last Friday. So this is swing trade. That's why the difference is swing trading and day trading. Day trading is a little bit tougher, but it's the same. You're doing the same thing. You're getting price when it comes down, it hits fair value gap. The reason why this was significant, right, is because it was a previous high. It was previous high right here. We broke out, broke structure, retraced the discount, and we broke out again. So this is now the support. Former resistance now turns support. Now I can get rid of it. Get rid of it. Okay. So right now we're like I said, we're just looking for price to go up. But all right, let's compare. Since I mean, we don't need to look at this SOXL chart anymore. Let's take a look at NVIDIA. All right, let's take a look at AMD. All right, if you look, we are following the trend. So let's take a look at the 4-hour AMD. This is the 4-hour MNQ, which is basically QQQ. As you can see, we have a dip. Let me delete these lines. These lines were previous gap fills. We filled them. And so, yeah, we came back down. And did we come into a fair value gap? We did. Did we sweep liquidity right here? So what are sweeps again, guys? When sweeps happen, that is letting us know that that's what helps change the direction, right? There's little sweeps, there's internal sweeps that make the price go up and down, up and down, up and down during the day. And then there's external sweeps, okay? And there's also soups. The soups are the sweeps inside fair value gaps. So there's multiple different sweeps. If I go to the 1 minute, right? There's sweeps that push price in different directions. Let me show you right here. All right, we had this high right here. We rejected it hard, red 2 down to sweep. So it pushes price down, okay? That's why you hear double tops, double bottoms. All right, we broke structure, swept, came down, but we did an internal sweep again right here. So that changes direction. So if you can understand that we're looking for sweeps, where? Well, and the optimal trade entries. And that's how you get into your trades. Okay, we have 30 minutes left of this one. This price is just looking like it wants to continue, but look at, do we have a fair value gap right here? We do, but how strong price is going, I think we could probably dance around a little bit here, but eventually we will continue past it. But we might dance around here a little bit, just like all fair value gaps give you some type of rejection when it comes to it. But we have relative equal highs right here. So price likes to move towards liquidity. So we have relative equal highs just above it, okay? So just right here. And when I say relative equal highs, it could mean it's touching or it's very close, but there's a lot of buildup of liquidity here. So if you look right here closely, none of them were swept, right? There were internal sweeps to push us in different directions. See a perfect example right here. There's internal sweeps like this that change direction. When we have a bunch of buildup, this is called low-hanging fruit. So if price were to just rip above this fair value gap right where it's currently at and dance around a little bit, I expect for this liquidity to all be hunted, and then that's when you get out. Or if you're on the bigger 4-hour time frame, then yes, like you want to have it go all the way to your target. But these are where people set their target, take profits. So just be mindful when you see this. This is like a grenade, right? They want to take all of this out at the same time. Okay. So we're gonna dance around maybe a little bit here. We'll see. But if you look at how the candles look in the direction that we're going, what helps give us an idea of how price is going is by looking at the wicks, right? We have wicks on both sides here, but for the most part, we got more buying wicks. So that's why price is pushing up. But just like I said, we are in a small fair value gap right here. 5 minutes. 5 minutes shows that maybe we still have a little bit more room, but we'll see. But we have a lot of fair value gaps down here now. That's letting us know that eventually, if we do come pullbacks take out internal targets. Like this is relative equal lows here, here, here. Okay. But we'll see. Right now, at this point, we just wait and we react to whatever we see. Let me go back to SO Excel. See, we swept the target. We came right back down to here. So potentially I could sell because if we do have a pullback here, then most likely it will pull back here. And this will create a high, higher high, lower high, which makes a small head and shoulders. Do I want to hold through any significant pullbacks after being up a certain amount? That's up to you, depending on how many contracts you have. Let's take a look. Yeah, so right here we have fair value gap here. Okay. But because we hit our target already, this doesn't always have to be support. Once target is hit, this could be an inverse fair value gap. So we can break through this and now treat this as resistance only because we completed the objective of having this high, consolidating, creating relative equal highs, high that wasn't taken, high that wasn't taken, high that wasn't taken, high that wasn't taken. And that is what's called a trend line. Right? Trend line where highs are not taken. So they're relative equal highs. And just like I said, it's like a grenade. We come up and we take out all of them. We take out all of them. Okay, so that's the goal. And once the goal is taken, we don't have any more goals anymore. So what do? We either take our profits or we zoom out. Let's zoom out. Let's see for hourly on SOXL. Okay, we are in an hourly fair value gap, which is a cause for resistance. Okay. Cause for resistance. Right, we completed our targets. We hit this internal. Okay. What else can we look for? We look for from this high where we broke this structure to the lows. We are in discount to go short. That's what we know. But do we want to go short when QQQ has not hit its final target yet on the 4-hour? No. So I don't want to go short yet, but this is a setup to go short. Does that make sense? This is a setup to go short, but because how bullish QQQ is looking with these relative equal highs right here, which is 130 points away, we're a little overextended. So this looks like this might be the target to go for. And before we start cooling down a little bit, and that's how you set up your thesis. I got QQQ just gap filled, actually. Hold up. So QQQ and Q, you can see looks the same. We had a daily right here. I had the alert set. And we had a gap fill. So the gap fills are also liquidity too, right? So this is the highs. We gapped down and we never came back to where we closed. So that's called a gap fill or a gap, and we just filled it. So that is something to look out for as well. So now we can go to smaller time frames. Target is hit. So do people take profits there? Look at that. People take profits at gap fills because it is a form of liquidity, just like fair value gaps are a form of liquidity. Just like what else is liquidity? Going a little blank right here. Does it make sense to you guys? Are you guys following along? It's the chat, huh?
Yeah, yes, BW, yes.
Okay,
It does
cool.
make sense to me. I trade soups, so yeah, it does make sense to me.
Okay, cool. I'm glad. I like that when people are engaging and unmuting themselves or even putting in the chats because in my head it makes sense, but hopefully in your head you're like, oh, what's this? What's this? So sometimes people are afraid to ask questions, so it makes so you trade soups. So you trade like ICT concepts.
Yeah, well, that's the only. Well, okay, no, that's not the only one. Also OTEs, but that's only the two I trade.
Okay. Yeah. I mean, if you just trade soups, then you're always buying a discount.
Yeah.
Then that's the best way to trade. That's the best way.
Mm-hmm.
Yep. That's very smart. I like that. I like that answer a lot. So you guys heard him. He trades soups. Soups price has to first break structure. And there's fair value gaps that it needs to fill inside of a 50% discount. So let me just color code this so you guys can see what I'm talking about because that is
What
very
do you mean by
important.
soups?
What?
What do you mean by soups?
Okay, let me explain that to you right now because it's very, very important. Let me see.
Wait, so first, it's just a terminology. It's just a terminology used by ICT, but he's going to explain it. It's
Correct.
called turtle soups.
Called turtle soups. So there's premium. Oh, I think I did it the wrong way. Hold on, let me just flip this. Okay, so there's premium and discount, right? So anything in the red, if you want to go long, you don't get it because you're chasing. This is all premium. So if price is up here already, you're chasing. So what do? You wait for price to come to discount, and that's why you take the range from the low where we break structure to the high. And so when price comes down, you look for fair value gaps, which are these gaps right here. Like I explained earlier, the 3 candle structure, if there's gaps, then it's an imbalance. So price likes to come and fill it just like it fills liquidity. But another form of liquidity is the swing low inside of the fair value gap. So you look for a sweep where price comes down and touches the low of a previous swing low. That's called a sweep. So when you get a liquidity sweep inside a fair value gap, that is called a soup, but it has to be in discount, which is green. Anything in green is where you can buy longs. Anything in red, you just have to either not trade it or go to a smaller time frame in order to find a soup because it will do that on a 1 minute, it will do it on a 5 minute, it will do it on a 15 minutes. That's why this whole time, all week, you should be looking long because we already souped it. The sweep inside of fair value gap is a soup. But if there's a, let's say there was this, right? There was this sweep right here. That's a sweep, but there was no fair value gap here. So this is just called an internal because it's not inside or outside of a range. This is an internal liquidity sweep. So the OTE is that if you want to get it, let's say this was the high that broke this low. So if you want to follow OTE, this didn't go back to OTE to go short. So there was no shorting opportunity here with the turtle soup strategy. But if you trade other strategy, that's fine. But the turtle soup strategy is being patient enough to wait for price to retrace back to 50%, just like right here. And this is a perfect example of soup. And because we have these relative equal highs right here, I'm just waiting for price to get here. So if you're not in the trade already, then you're too late. Or let's say, like earlier, I showed you the example of the 1 minute, right? If you wanted to get into the trade to continue, we just did an internal sweep right here, right? Inside that, actually, we actually did a soup because there was a fair value gap on the other side, right? Like earlier I was showing you. I think it was right here. There was a fair value gap right here, actually, right? This is a fair value gap. And you go to what was that, 1 minute? You see, we're in a fair value gap and we see a liquidity sweep right here. So this is a soup to go short, for example, but because the 4 hours showing extremely bullish, you could either scalp it or you could wait for price to come down for OTE in order for you to go long and continue the trend. So we take this low, we go to this high, 50% because we broke structure. You always have to break structure first where we have a body close above previous swing high. So we get a BOS, we get price sweeping both to come down to take out relative equal lows. So this is going to probably want to come down to here. But for people who like to go long, oops. But for people who want to go long, we look for fair value gaps inside 50%. So the fair value gap would be either here to go long, bullish fair value gap. So right here to go long, which also happens to be in the 618, but I messed up the colors, right? The 618. So this is an example of soup, right? You wait for a price to come down, dance around a little bit, maybe do like this, and then come back up. Something like this. And this is what you want to try to anticipate. You want to try to anticipate it. You don't want to guess, oh, well, we souped, okay, now, or we swept, now I go short. That could be possible and you could win, but OTE is waiting for price to come here, getting it, because if you get price here, let's say you go long right here, and you put your stop loss like below fair value gap, right? There's a 4-to-1 risk to reward ratio. And let's just say it goes all the way down here and you lose, right? That could happen, but it's already pulled back so much that if you have oscillators, it's already going to be oversold. So there's a higher chance that it bounces off oscillator coming down all the way down here to reset their RSI by coming down here to reset the RSI and to go long to continue the path up. Does that make sense? So you need corrective activity to continue the trend. You need to pull back to continue the trend. You don't just trade up and down because it's going to affect your emotions, right? So we swept. So we're coming down. We're sweeping these all these relative equal lows like I was looking for on the 4-hour bullish target. All right, we're sweeping. Do we have a fair value gap here too? Yes. So we're probably sweeping lower. Right, we have a fair value gap right here, right? We just swept all the little internal liquidities. That's why I favorite it. It's so hard to find things. All right, we had one right here and we had one right here. And we just souped again, right? Or this is not technically the soup, right? Not soup at discount, but this is a fair value gap sweep. Do you see that, guys? We had a relative equal lows, we pulled back, and you want to find an excuse to go long, right? And is it an optimal trade entry of this overall range? No, but that's why trading is discretionary. Trading has a system, but it's discretionary based off of how you react. But you got to have systems in place because you got to have risk management. So it's up to you to be like, oh, I saw a sweep here. I want to go long and scalp 5 points, right? And if you trade NQ, $20 per point 5 times 20, you're done. But if you trade micros like myself, where I like to hold my position a little bit longer, let it hit its liquidity, you could do that as well. See that? You see this where I said we want to find an excuse to come down in order to come up? This is just an example, right? So like I said, though, we are in a hourly fair value gap, but again, for 4 hour, we want to do the same exact thing as we just saw in the 1 minute. We want to come up here and take it out and then wick. Okay, we most likely, if we do come up, we're gonna wick right here, and then we'll like dance around a little bit, maybe create a bull flag, which you guys see. Well, if you guys understand what bull flag is like some people say, oh, I don't trade patterns, I don't trade this, but you have to understand what it is, right? What is a bull flag? It is a breakout and just some kind of consolidation with the last sweep in order to come up. That is a bull flag. A bull flag always has a sweep. A bull flag always has a sweep. Okay. And it's the same thing. I'm just saying it in the context of we look for, like, I don't have to explain, we have break of structure and retracement and another higher high, and we're just creating the market structure. A bull flag just lets you know that, hey, we're gonna displace up, consolidate a little bit after we hit our target right here. And hopefully we can just continue up to this final target up here that started the break of structure. But this is the choppy part that you guys have to weather in order to stay solvent and continue trading. We're gonna have to have some type of consolidation like this. And if you're getting chopped up here, just understand, zoom out and wait for the displacement and wait for the OTEs, wait for the soups. And then if you could do that, then your trading will have a little bit less risk, less stress, and it'll be a lot more clear, right? So let's just see where we're going. We're just consolidating again right here, right? Because objective was taken, we broke structure, and OTE is down here. So we want to see where price goes, but since it's not an OTE, we're not trading, we're just watching. Let me take a look at SOXL again, because I'm still in it. Hopefully it didn't pull back hard. All right, we're still dancing in this, right? We're still dancing in this. Same exact, it looks the same. It looks the same. That's why I always have the market with me, next to me, when I'm trading anything else. Because you want to continue the trend. If this is pulling back heavy, then I know to just be like, okay, I just need to just cut this one right here. Right. Unless it's like, you know, NVIDIA or Tesla, because sometimes they move the market. But it's something like this where it is ETF of a group inside of QQQ, then this has more weight. So right now is creating the head and shoulders, but this is not a breaker structure. There was no breaker structure. We didn't have a close below these new lows. So there's no confirmation yet that this is a head and shoulders. But if this was a body close and not a wick, then I would look a little bit more like, all right, we're gonna come down a lot harder. But because it was a wick, we're just watching. We're just watching. Anybody else want to comment or say anything while price is slowing down significantly? This candle, look at this 15-second candle. It's sort of look a little spotty. Look like it's Friday. People want to go home. This does look like a head and shoulders, though. See, this is the body close I was talking about. We want a body close below, but because this is the wicks on the 1 minute here, it's a little bit less. It's a little bit less. Okay, well, this is another example of a fair value gap. You guys see how fair value gaps work? I just want you to see in real time just how they work. There's a million of them. Okay, so your job, your homework, if you're interested, is to look for them and see how they react in fair value gaps. This is a bullish fair value gap. And if we start seeing bullish, 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 that means it's bullish order flow. That means we're in an uptrend, right? If you see red, 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 red fair value gaps, right? Like if we flip this chart upside down, right? then this looks very bearish, right? We have a sweep right here. We had a fair value gap created right here. We had another sweep right here. This would be bearish, bearish order flow. All right, we got sweep, 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 bearish order flow. But because it's bullish, it's a little bit more scary. I like shorts better than longs because when it falls a lot quicker. Sometimes with calls, it just takes forever to continue to build up, but we have to accept that. Because one thing about the edge that longs have is price always goes up. If you look at a 3 month ago, right, 3 month chart, it always goes up. It doesn't matter who is in charge, except for the 1 year. I think we had a red year, which is crazy. I think it was like 2 years ago or something. We had a completely red year. But for the most part, price always goes up. So that's the edge that you have is to go long. But shorts is that it falls quicker, so you could scalp it better. So we're still continuing, right? It looks like this 4 hour or this daily actually. The 4 hour shows what? Do we have buying wicks right here? Is this a doji or is this more of like a bullish candle, right? It's bull. It looks bullish. So that's why you want to stay out of the way. If you're looking for shorts, you want to just stay out of the way. And that's why some days, like on Fridays, a long time ago, I was like, how do you trade this? It just continues up. It just goes up all day. Well, there's two things. You could either not trade it because just because it's going up doesn't mean you have to be a part of it, right? Because you could be a part of losing when the price is going up like this. How many times has price just gone straight up like this and you lost, right? So you don't have to trade this. Or you wait for OTE, but this is just something that's not very pleasant to trade, right? We had a fair value gap right here, actually. That was another example of waiting for OTE. But it's not very pleasant because in retrospect, this looks very clear. But you know how many 5-minute candles you have to sit through in order for price to do this? Look at this. This is a mess. Up, down, up, down, up, down, up, down, get wrecked, right? So that's why sometimes it might look like this in retrospect where, oh, we're in an uptrend. Yes, the 4 hour shows we're bullish. Then don't try to short it or don't even try to trade it. It's okay to sit out today. Does that make sense, guys? I just want to save you guys some money. You guys can use that money for educational purposes. You guys can use it for some, paying for just the everyday needs, right? You don't have to trade this. And when it's very clear, that's when you trade it. So you limit the amount of trades you do. Look at this. This is SLXL. Beautiful. Right. That's why I didn't necessarily say I want to go. This is the Head and Shoulders. It's still the Head and Shoulders until it breaks this. Because we have a high, a higher high. We do not want a lower high. So I just needed to just get past here. And then we just continue up. That's what I want. But we react. We react off of what the candles give us, right? Just like we react off of our emotions. Our emotions are, you don't want to suppress your emotions. A lot of times people talk about trading and they say, you got to suppress your emotions. No, your emotions it's a signal. It's letting you know something, right? I was reading this book, Mental Game of Trading, last night. I was continuing it. I bought it a long time ago. I didn't really read it, but now I have been. It's actually pretty extraordinary. There was this one part where the guy says he would always get headaches from trading. He'd always get headaches from trading. Yeah, this is going to be recorded. Yes. And I don't know. I might put this on the YouTube actually. So he said that he was always getting headaches from trading and his family agreed with him. And he would take Tylenol or Advil, and he'd still get it on the weekends now. And he realized, okay, well, I got to do something. So he went to the optometrist and he got prescription glasses. And he realized, like, I don't have headaches trading anymore. So it wasn't the trading, right? So your emotions are just giving you signals and your solutions to them may not be what you think it is. So it's your job to use how you're feeling to fix the problem. You got to find the root of the problem. Why am I chasing? Why am I not getting optimal trade entries? What am I doing wrong? And repeating it. And so you got to have to figure out what the problem is actually, because it may not be any of your technical analysis. Maybe you're very good at technical analysis, but it's just something with the mental side of trading that you shouldn't try to suppress. Figure it out, right? And that's how you get better. I don't know if that made sense, but yeah, it's a pretty good read. Mental Game of Trading by Jared Tedler. He's like a psychologist. And he says that, all right, man, Queasy. Thanks for hopping on. Yeah, this will be recorded, so I'll record this and this will be available for members. Wow, BTC just hit 60K. Ooh, I got an alert. So that means trend is going up. Trend is going up. Let's see, BTC. I don't know. Why does it say this? Lagging? I don't know. I think it's lagging, but got it on Robinhood. Yeah, continue up. Go back to SO Excel so I can manage my position. We're already up. What? It's $1.86 today. The 618 is so close. This is fair value gap, right? Do we hit an OTE on this? We really didn't have a breakout though. Let's see. Actually, right here, right? We didn't really hit OTE for the scalps. And another thing to try to recognize too in these situations is that like if there is a fair value gap that it's coming back down to, how did the candles look when it comes down there, right? This is 2-2 reversal. This is a morning star. So look at how price reacts. This is 2-1-2. 2-1-2. This looks like a morning star. All right. And same thing when it's coming down, right? When we have fair value gaps and it's pushing it down, which we haven't had in a minute. Just look at how the candles form, right? We got that 2-2. This is actually 2-1-2 reversal, right? 2-2 reversal. So we just look for big rejection wicks after targets or when targets are met. This one wasn't. There must be a reason. Probably there was a divergence. But just look at how it reacts there and then try to anticipate by looking at big wicks. Oh, remember I said we're going to come down and try to take out these relative equal lows? Immediately when you saw this rejection into a fair value gap, that could be your signal. So try to find little things like that in order to improve your trading. Okay, not just like, oh, we're ripping breakout trade. You're going to lose. There's a higher chance you will lose than to win if you just play breakouts all the time. Okay, but price is slowing down. Pivot plays weight class. All right. Any questions so far? We're just prices. You could sell. We're slowing down. So I can answer some questions or something. I don't know if I am going to take any trades in this situation where we're at right now. So it's a great time for you guys to, maybe send me some tickers or something we could look at. Ooh, come on, baby. Come on.
What you was explaining right now, is that almost trading like price action?
This is price. This whole thing is not fundamentals, is all technical analysis. So technical analysis is, yeah, it's price action. When you see these candlesticks, what they're doing, it's mainly technical analysis. There's other things that you can incorporate like news, fundamentals, there's a lot of IPOs and stuff. There's other ways to trade, but this is strictly off of, yeah, price action alone. Good question. Let's look at Apple. Apple's trying to choppy. Look at the weekly charts. Let's take a look at the weekly. Where are we at? So weekly. Wow. Microsoft looks good. Do we sweep? Every time though, I want you guys to create a checklist for yourselves, right? before you trade any day. Where do we sweep on the bigger time frame? All right, we sweep on the daily time frame. We sweep on internal time frames right here. Then what am I looking for? I'm looking for longs. Do we have relative equal lows? 1, 2, 3. This is a PMG. So if you guys trade the strat, we took out 1, 2, 3 targets. We're going for 4. 4 targets are right here. This is the PMG. So before you trade any day, look at daily time frame or 4-hour time frame, hourly time frame, and just look for sweeps. Look for fair value gaps, look for sweeps, and that will give you the direction for the day. Unless there's news, right? And then daily, let's look at the daily. All right, that was that sweep internal. We had that reversal right here. We get more trend lines. right here. This is relative equal lows. We get it, and then we look for wicks. Okay, we have buying wicks right here on Wednesday, buying wicks on Thursday. So what do we look for? We look for a break of structure here. And because the weekly showed so bullish, what do we go for? We go for one target here, and we go for one target here. Okay, broke structure right here. So how do we do that? Now we go to the smaller time frame, right? We could take this. Broke structure. Let's take a look. How can we possibly have gotten in maybe? Broke structure right here. Pre-market was already showing that was kind of bullish. 5 minutes. Yeah, so we're looking for longs for Microsoft in the morning. So what do? We look for what changes directions for price in order to, well, yeah, what changes directions, right? We look for relative equal lows. And we look for our liquidity sweep. Right? When we look for it, we got to break a structure here. So what do? We go to smaller time frame. There really wasn't an opportunity to get in, really. I would look for longs, obviously, but there was no fair value gaps, really. We go 30 seconds. Find fair value gaps. Do we have any fair value gaps? We have one right here. This is not the best example, but if this was a 1 minute or 5 minutes, this would be a good example. But this is 30 seconds. That is like the only opportunity to get in with the soup. Because we has to be in a fair value gap and it has to be a sweep. So there's a sweep, fair value gap right here. We're looking long because what? The daily is showing us that we want to go up. So we break out, come down to OTE. There's no fair value gaps here. So it's up to your discretion to figure out where it is. Look for fair value gaps. But then we created one right here. We came down one more time. This was the trigger to take us to where? Right here. That's your exit. First exit is internal, and then external is your exit, okay? Then it's up to you to figure out bigger time frame. More of the bigger time frame goals. But you want to go target here first so you can cover your initial entry. That's why it's if you're buying one contract, then you go for bigger targets. But if it's too expensive, then you don't buy the expensive ones. That's just, you know, common sense. You don't buy the expensive ones where you can. Otherwise, you just get out right here. If you buy it super expensive, you have one contract. You have to just get out on the short targets, and you have to miss out on the big targets. Okay, but again, price is choppy all day, and again, we look for what? We look for sweeps. Look for sweeps. This was the swing low right here, this range. We came, swept it, and we continue up. Okay. So overall, it is kind of tricky sometimes on Fridays because the candles, they are like when you see red, green, red, green, red, green, red, green, red, green, then it makes it a lot harder to not chase. So this is an example though, right here, actually, where you might have to not take it in OTE. When we have our sweep, we have our target, we're pushing up. We just look for the fair value gap right here to enter. And that could be an example. But that's why, like I said, you don't always have to trade. But if you trade just soups, you will have a higher winning percentage. Is your OTE fib 0.79 or 0.7? It's 0.5. 50%. That's it. But if it goes to 618 and there's a fair value gap there, then yes, that's another one. But 0.5 is the minimum, right? But it's like I said, it's discretionary for something like this, and you wanted to chase, you want to just scalp a couple points. Yeah, you can get in right here. But it's hard with options because it's hard to set your stop loss, and then you can take prop. You can't scalp when you set your stop loss. So you have to cancel your stop loss, and then you gotta then fill it. So it's tough in this situation. So that's why it's better for OTE, so you can hold your position longer. But yeah, 0.5. Let me see. Yeah, that's why when I showed that 4-hour chart right here, if you look right here, it's 0.5 and then 618. Let me just make this back to normal. So I was just showing you the colors. All right, there's 0.5. If it's in discount and it's digging a little deeper, that's when I have my fair value gaps, and that's where I have the 618. But there's gonna be other times when you're trading day trading and you're trading the 5-minute chart, it will just tap into that 0.5 and go. it won't go a little deeper, and you'll be like, damn, I was waiting for it to come. That's why 0.5 is where I want to try to look to start getting into. Maybe start your position, maybe get like 1 or 2 contracts. And if it digs a little bit deeper, you look for that soup, you can load up. But sometimes it taps at 0.5 and it leaves without you, and that was your opportunity, right? But 7.8 is too deep. 7 is too deep. 0.5, 618. If you can do it in this fashion where you get the breaker structure and you get the OTE of 0.5, 0.1618, at least it's golden zone. All right. If you just do golden zone, then anything in this box is considered like optimal trade entry. Yeah. So good question. But look at, you see the 4 hours is still going, but this is the 4-hour candle. We have 30 seconds left of this 4-hour candle. If we could slightly get a little pullback because every candle has both wicks on both sides, right? Both they have wicks on down before it went up. So this next candle might come, push a little down. You think it's a reversal, and then it just rips at the end of the day. Power hour. So we'll see. Just because it's slowing down a lot. But like I said, if you're in a position, you know, you can look for those targets, but till then, I don't think it's a good idea to get into a trade right now. I am in my swing trade from SOXL. That's it. I'm just swinging SOXL. So no, I didn't. That's why, and it's not really a great day to trade because they only give you like a couple opportunities. But we could be pulling back, like I said, before we launch up. So, I mean, we could look for fair value gaps right here. Let's see this fair value gap right here. Oh, came down. No futures, no. Yeah, no futures. Oh my gosh. Like I said, pull back before coming up. You see this? Holy crap. But that's why the new hourly candle. That's what I'm saying. That's why when you're close to the hourly, wait for it. Look where we bounced. Fair value gap, right? Look where we bounced. You see that? But that doesn't mean that, you know, it's gonna just start going up from here, but we could. But look at that. It's just looking for a reason to create a wick. So you have an hourly. Look, it just created a wick. You see that? That's a perfect example. It doesn't matter how much it goes down because we're looking to go long. Right? But yeah, that was a lot though. I don't know. That was like, I don't know. I don't do ticks. I do points. So that was, you could multiply it by 4, 56, all the way to, that was like 50 points almost. It was crazy. 50-point dump. So this is a breaker structure though. So internal breaker structure, right? We have a breaker structure where we had a close. Now we got to close below it. But we came down to fair value gap. And look at this, right? So it did dig a little bit deeper, but look at where the body reacted, right? At the 618 area. Yeah, it's right there. At the around the 618 area. And that's where that you look for fair value gaps. There was no fair value gaps from 0.5 to 0.6, right? But there was one in 618. Immediately we got your little tweezers down here. We got our little swing low right here. So this is, yeah, this is an opportunity to scalp the longs. Perfect example, guys, right? You saw it dumped and then people reacted. They want to go short, but we're not looking for shorts. Doesn't mean it can't come down, but we're not looking for it. But it could come down a little lower, right? We have this fair value gap right here. Which one is this one? 5 minutes. So there's a 5-minute fair value gap. So say we do come down, and that'll be the same as what we broke structure. Let's see. That could be a drop later, right? Come all the way down here later. and that'll be the soup. So if people who trade soups, if we come all the way down here, that's what you have to wait for. It could leave without you. But
Is this something that happens like on the day, or could it happen like the next day or next week?
it doesn't have to happen today. That's the number one thing. That's a good question. When you see a fair value gap or you see liquidity and you know it's supposed to go there, and you get in and it pulls back and it chops around, and the next day sometimes it gets there, you know? So just because you know where it's going doesn't mean you got to get in now. That's why chasing is very important not to do. Because if you get an optimal trade entry, then you could just walk away. But if you're chasing, then you have to be on your glued to your phone. You got to be glued to your computer because you have to exit if it goes against you. But if you get an optimal trade entry, it's gonna hit your stop loss or it's gonna hit your profit target. It don't matter because it's a better risk to reward than a 1-to-1. So if it's better than a 1-to-1, then you could size up. But if it's a 1-to-1, you cannot size up. Am I wrong? Right? If you put $1,000 and you have, 50% chance of winning, right? That's kind of sketch. But if you put less, right, then you're not afraid to take that chance of a 50. If you put $100, you have 50-50 chance, then okay, I could do that. I can't do 1,000, right? So that's the importance of waiting for price to get to where you want it to go. If you put a limit here, you got out 50 points back. It was a quick back and forth, right? So again, we got soups here, we got soups here. We're just in the middle of a range, so we're not going to trade. It could go up or it could go down. And when it's like that, then that means it's not clear. That means you can't trade it. So, but that's what I'm saying. Just mark it out, fair value gaps, and use it how you want to use it. Some people do, play inverse fair value gaps. That's their strategy. I don't trade fair value gap, but as soon as if I see this one break and close above it, then I'm gonna get into it because I know that this bearish resistance is no longer resistance and it can act like a support. So I can enter long if it closes in the next 7 seconds above it right here to take me to my target. You know what I mean? So it's up to you to create what strategy you want that works with your eyes. Sometimes candles, like red candles, green candles, sometimes with my eyes, it gets me a little emotional, right? I'm like, looks like it's gonna die. Oh, it just pulled back on me. But if you just have white, it's just doing what it's supposed to do. So like it's up to you to create that environment for yourself to to see the liquidity, to see the targets, to make better decisions. Damn. That was a deep pullback. That was crazy. But it did touch fair value gaps. All right, so it's 19 seconds. Sometimes we will wait for it to close above and continue up. So yeah, I guess the price is done doing what it's doing. Just have it marked out, I guess. Where what was that, 4-hour? This 4-hour area. I'm just gonna drag it over here. I'm gonna send an alert and it just lets me know that my analysis is correct. And if it doesn't do that, then I'll have to research and see what I did wrong, right? I'll be internal, or I'll just do liquidity pool swept, right? That's just like, it'll let me know we get swept. But that was such a quick move, guys, right? We inversed it. You see how we inversed this fair value gap, and I would color code it. It's inverse now. So it's letting me know that this resistance did not hold. Now it could be acted as support to continue up. So this is a bullish in blue, and this is supposed to be red for bearish, but because we inversed it, I like to put a different color, neutral, to let me know that, hey, we could continue up. That was a good example, though. That was crazy. Any other questions? I might hop off soon since I'm not going to take any more trades for the day.
Hi,
Hi.
you mentioned sweep. Could you explain that?
A sweep?
Yeah.
Okay. Sweep is basically candles go up and down. So sweeps, oh wow, what's going on? Candles go up and down. So sweep basically is when one candle passes another candle, but does not close above it, and we reject it. So there's wicks. So wicks are what does the sweeping. Wicks, we swept. So if it didn't pass it, right, like this, for example, this is lower than this one, and there was no sweep. But if it passed it, came above it and came down, that's a rejection. That's letting you know the price is going to change direction. But it really, you need context, right? If it's on a smaller time frame, or if it's like an internal sweep is this, right? External sweep is if we came all the way down here and we took this low out. That's an external sweep. But if we took out this and here, this is an internal sweep. So, I mean, obviously we came up and we pushed back, but if you look at different time frames, like right here, let's say 5 minutes, there was a wick, right? So on the 1 minute, it looks like, oh, like it wasn't a sweep, right? It looked like a 2-1-2 reversal. Like that's why it's context. You look at the bigger time frame, it is a sweep to continue up. A sweep means we're just taking out wicks. One wick is taking out another wick. That's it, to change direction. And if it takes out multiple ones, that's called, sweeping a pool, taking out relative lows or relative highs. Okay. Does that make sense? It's just
Thank you.
this is
Yes.
a wicks. Yeah. So
Yes.
tweezer bottoms, tweezer tops. You're looking for one to be lower than the other. All right. So this one's pretty even, which is why we came back down and took it both later on. But if you have like something like this is not a great example, but this something like this where if this body was right here, this is called a tweezer top because we had one candle higher, the wick is higher than the other candle. So we swept it. And now we're coming down. So there's a 3 down. 3 down is an engulfing candle. So we take out both the highs and the lows. So that's a double bearish candle. And if it was a weekly 3 down, then yes, we were looking for price to come up so you can short it. Does that make sense? So if this is a weekly candle, we're looking for price to come up to what? Optimal trade entry to go short. It didn't go. It didn't necessarily hit
Thank
it.
you.
But inside there is probably lower highs, higher lows, sweeps. You want to look for sweeps inside. And that's why I said go with the daily bias. You choose your daily bias. You look for how the candle is reacting and you want to continue the trend. So anything that's going the opposite way, you're waiting for it to get in, not to chase. But yeah, good question. We're just dropping around now too, so. Yeah, then we could be pulling back. Could be 11-11. We don't know. It's just choppy action now. So yeah, I guess I'll leave you guys at that. If without any more questions. I appreciate you guys wrapping on. I will record this. Members will be able to see this recording over again and all these amazing examples. And yeah, you guys have a good week.
Thank you. You too as well.
Thank you. Thanks for hopping on.